Well, let's get started over here on this Monday as we talk about the overnight sale that happened here first thing this morning. And yes, it could come from the United States, but it does have a little bit of a caveat with it. The amount was above, of course, 100,000 metric ton, 137,000 metric ton to be exact. South Korea was in the market to buy corn, 137,000 metric tons, but optional origins. Now, what that means is, yes, it could come from the United States, but it may not. So we did have that to report this morning. On over to the export inspections. Now, this is what has been inspected to be shipped out of the country. Corn, 460,307. That is lower than last week's 550,930. Sorghum was down from last week, but as we have mentioned before, sorghum fluctuates quite a bit from week to week. 20,319. Soybeans, 1.14 million metric ton. Now, that was higher than last week's 1.04 million. And the wheat was higher this week as well, 473,960 compared to last week's 420,653. Let's go look at the futures market. Did that export inspection number really affect this corn market too much? And the answer is really not too much at all. March corn up 3 cents at 388 3/4. And it's a tight range, by the way, 389 to 388 and a half. So over in the May contract, we're up 2 3/4, and the December new crop is up a penny. That corn market's very quiet this morning. March soybeans down 5 1/4 at 940 3/4. The May is down 4 3/4. March Chicago wheat down 2 1/2. The new crop July 565 3/4, down 2 1/2 pennies. Kansas City wheat for March down 4 cents now at 490 3/4. The July is down 3 1/2. It's at 506 1/4. And in the Minneapolis wheat market, that market is weaker as well. We're down anywhere from 2 to 3 cents across the board. One or two of these contracts about 3 3/4 cents lower in that Minneapolis wheat market. Let's turn our attention to Todd Horwitz this morning with Bubba Trading. Good morning, Todd. Welcome to a brand new week. Well, now we're looking at Wednesday. Sounds like that phase 1 trade deal will probably get signed. What are your thoughts going into that, or what are you hearing from the trade?
Well, you know, John, I think you look at the markets, and the markets aren't saying much at all. I think they're looking back at the USDA report, which was exactly as we thought it would be. And, of course, the grains are all going opposite to what the report said they should be doing. But at the end of the day, I think this trade deal is going to be an ongoing thing forever. I mean, yeah, they'll probably get something signed. But, you know, until price shows us that we're going to see all these new exports and see all this new stuff, I don't see a lot there. I think that the farmers and producers know a lot more, and I think the trade knows a lot more, and they're telling you that, okay, the deal's really kind of priced in because we're much higher than we were a few months ago regardless. So this has been kind of building all along. Now, I do think we're going to go significantly higher from here, but not because of trade, because I think of price.
Makes you wonder also if we're going to continue to see that third round of market facilitation payments.
Well, you know, again, that may or may not be. I think if we get the deal, they may not be. But, of course, it should make it up in price. But, again, I think you're going to see, you know, some pretty dramatic price movement going upwards here. You know, we're all starting to look very solid. And the patterns themselves, the price patterns, look very solid, looking like there should be much higher prices. So I think if we can get there, which is a really big need for our farmers and producers, because unfortunately, although we continue to hear there's no inflation, their input costs are going up every day, and that makes it a bigger problem.
That's a good point. Well, we'll come back in just a moment and continue this conversation. Stay with us. More is around the corner right here on the Market Day Report. The protein complex has pressure of its own today on over here in the live cattle market. We'll get started here first. Cash cattle trade last week, steady in the south, dollar higher in the north. February fats down 65 at 126.78. So that would mean that last week's cash cattle trade is hovering right in there, a little bit underneath that February contract. April 127.53 is down 42. The feeder cattle market, well, it's lower today as well. The feeder cattle for March down 160, 145.85. April down $1.38, and the May down $1.07. And the February lean hog contract down $1.47 at 65.78. April down $1.25, and the May is down $1.32. Todd, a lot of folks are starting to talk about just how concerned they're becoming with this hog chart over here, and how it looks like weakness could be ahead, at least here for the near term, even if we get a signed trade agreement on Wednesday.
And there's your answer about the trade agreement. Look, I'm concerned myself now. I thought that when we got through 70, we were off to the races. And unfortunately, it looks like another false start. And if they don't rally back today and at least get close to unchanged, I'm afraid that I'm going to have to reverse and get back to the short side of the market. I hate to say that, but that's what it's looking like. It looks to me that we are in a very dangerous spot here. And you would think that if there was a trade deal in place and everything was to be done, we might see some higher prices, but we have really struggled about the last week or so. Going back to a week ago Friday, we had the limit down move. We kind of churned around last week, and now we're much lower again. And it's becoming very concerning here. I think cattle looks fine. I'm not at all concerned in cattle. I think that cattle is going to continue higher. I think this is a natural pullback. So, but the hogs do have a little bit of concern for me here.
I want to talk also about crude oil. Earlier in the day, we were down about 90 cents a barrel so far on this crude oil market. What are your thoughts there? We're down, I'm showing 53 lower right now at 58.51.
I think they're going significantly lower now. I think this is finally, we got the action. We had that big move up last Tuesday night, which took out the drone bombing highs, which is what we were looking for. And now we have reversed and are now short crude. And I think now we get that big move to the downside. First of all, there's a well oversupplied market. All the trouble, even though we have trouble in Iran and Iraq and things like that, that's starting to run its way through the market. The backwardation pattern that was in place is still slightly there, which means there's still quite a bit of room to go on the downside. And I expect to see that pretty much regular to see selling and pressure. And I do look for the high 40s sometimes.
Okay, Todd, thank you very much. Always appreciated. Todd Horwitz with Bubba Trading. And Christina, that's one of the things that Todd has said for quite some time, that he was looking for a major correction to come in this oil market at some point.
Backwardation, his word. All right,
That's
thank
right.
you. Appreciate that, John.